Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Brian, thank you for taking some time to join me on the podcast.
It's a pleasure. I'm looking forward to it.
In today's show, we're going to talk about banking. We're going to talk about your story, personal, professional, the book, the leadership star, and the principles that fell out of that, but also what you're working on now. I know a lot of this ground has been covered by you a few times, but hopefully there are a lot of nuggets that come out of this, and I think there will be, that anyone that's in a corporate life, that runs their own business, that is a leader in their own right, can take a lot away from this and pick up the book as well, which I'll put in the show notes and in the YouTube description for folks that want to take it further. There's also an audio book, so you can get it in audio if you prefer. My first in-person interaction with you was when you presented at a financial event, a really intimate one in Melbourne at Kooyong Tennis Club of all places. And it was there that I had seen kind of like the raw story of how you came to be the CEO of Westpac Group, but all of the major milestones that led up to that. And I just wanted to ask you this on air because it was wonderful in terms of the way you described how you went through that journey. And it wasn't always easy, far from it. And so I'd love for you to take us back in time a bit, Brian, to where that drive in you came from, how it manifested through time, and feel free to take pit stops along the way and tell us about the various episodes of your journey that ultimately ended in that point, and then I'll have questions that fall out of that, I'm sure.
Sure. Well, let's make it a conversation. Feel free to stop and interrupt me so it's not just a giant brain dump from me. I suppose the way you've asked the question, where would I start? If I go back to my family background, I was very conscious of having been quite fortunate in the opportunities that were given to me. And that created in me a sense of responsibility to use the benefits that I'd had to do something meaningful with my life. So I grew up in a very comfortable, wealthy town, Darien, Connecticut. I was born in New York City, and my parents moved to Connecticut when I was 1. And it's a really lovely town. It's a nice, safe place to grow up, good schools, all that. My parents are from Chicago. My father was from a working class family. He was the first one in his family to go to university. And I became very aware that he had worked incredibly hard to create the life that I and my siblings had. And I suppose it was really reinforced when my father lost his job when I was 16. And at that point, I had just signed up to go away to boarding school for the last 2 years of high school. And I was really conscious of what a big financial commitment that he was making, because the public schools in my town were very, very good. I just had this sense, I don't know, it's a bit weird. I had this sense that I wasn't working as hard as I could in year 10. And I knew that I was capable of more. And I felt somehow I had this instinct that I needed more structure around myself to do what I was capable of. And so that combination of feeling like I'd had this opportunity and knowing that it had caused a sacrifice from my father made me really feel like I need to get everything out of that. And I guess that started me on this path of, wow, I've really had some amazing opportunities. So I went to this boarding school, worked really, really hard. And as a consequence, I got into Princeton, which is really, really hard. And so then, and there's a level of randomness in that as well. So I was just conscious of this, always had this sense that I've been really lucky and that somehow I needed to make the most of that. And so if you talk about where the drive comes from, it was this sense of most people don't have the opportunities that you have. And so what are you going to do to be worthy of that, I suppose?
That's really interesting, Brian. I haven't come across anyone that had that internal motivation that comes from a place where, it is a privilege to be in this situation, to be, especially in year 10, when you're
Yeah,
16 years of
that's a bit
age.
weird in that way. I don't
That
quite
per-
know why.
that perspective is really interesting in itself, in the ability to reflect on yourself and your own capabilities. I mean, a lot of parents listening to this would probably sit back and think, I wish I could foster that in my own children.
Yeah.
You know?
Well, that's interesting. Just to go deeper on that for a minute. The two things I think are salient to that. One was my father had this very clever thing he would do, which is he would say to me, if let's say I took a test or something, and I was lucky that, this is the way I think about it. I was really lucky that I was born with a good brain. I don't kind of take particular pride in that or think I did anything to that. I just, it's like some people are tall and some people are strong, and I got born with a good brain. And so I was able to get pretty good grades without doing very much work. And my father I might get a B+ or an A- on something. And my father would say to me, well, you could have done better on that, don't you? And he would say it like that. And I would go, oh yeah. And so he was very clever about making me internalize what I was capable of. Now I've tried that with my son. It doesn't seem to work. So I'm not suggesting that that's an answer, but for me, that created this habit of thought that I was capable of whatever I set my mind to. And it was because he I think positioned it in that way. The other thing, actually, I think going slightly farther back, in year 9, I was chosen by my English teacher. At that point, we had this junior high school. It was 7, 8, and 9. And we had this extraordinary English teacher who ran a yearbook program. And I got chosen as the editor of the yearbook. And he was this unbelievably demanding, strict, scary guy. But I suppose the cliched way you say it is he believed in me. And he taught me, he was a real perfectionist. And I guess he was the first one who taught me what good looked like, and this notion of setting high standards for yourself on the work and not accepting things that weren't really high quality. And so I guess it's a combination of those things, of this having an early exposure to what is it to set really high standards, combined with this sense of capability, combined with this sense of having been fortunate and having a responsibility to take advantage of that.
It's interesting that particularly that first comment that you made around coaching, and your father coaching you to self-reflect.
Mm-hmm.
I think a lot of parents, in my experience at least, Brian, seem to be more direct and seem to be more, I guess, straightforward with their feedback and their expectations. Whereas if you're coaching someone, it's a very different thing to being a consultant, right? It's very different being a coach versus a consultant, to giving someone the answer or giving them the goal versus encouraging them to discover it for themselves. That discovery process seems like it was really like your brain was just ready for it in a way. I had a question because I was doing a bit of digging into this. I did notice that the school that you went to was a boarding school. And I wondered if that had set you up for being more resilient with things like being away from family to pursue something. I don't know if you ever thought about that.
Well, yeah, I think a slightly less generous way to say it was that I ran away a little bit from issues. So my parents were getting divorced at that time. And so to a certain extent, if I'm being brutally honest, being away at boarding school meant I didn't have to deal with the day-to-day of the challenges of my parents going through a divorce. And it allowed me to be kind of selfish and focus on my own work and my own aspirations. So I think that's a more brutally honest and slightly less charitable description of it. But it certainly did make me, I got used to living away from home. I got used to having to structure my work, take accountability for what I was doing. No one was going to particularly look out for me. I mean, I had lots of good support, but I guess I learned pretty quickly that it was going to be up to me how hard I worked and what I was able to achieve. And that certainly meant that when I got to university, I found the first year of university pretty easy, whereas a lot of people found it quite hard because I'd already gone through some of that transition. It's probably why they are called preparatory schools. It really did prepare me for university.
You kind of got that conditioning a few years earlier than the other students, perhaps.
Yeah.
Why did you choose to study European history?
Well, this is also going to sound really odd, but I actually knew I wanted to go into banking. I figured that out in year 10. And fortunately, when you go to a good university in the States, the general view is if you do well, then they assume you're capable, and they don't view university as a trade school. They view it as helping you learn to think and so forth. So I had a strong view that I was going to go into banking, and I decided I wanted to do something else with the 4 years of university. Originally, I thought I was going to major in economics because I thought that would be a good preparation. But I found that it was just so theoretical and removed from, in the way it was taught, from what I thought was going to be relevant to finance that I just didn't enjoy it. And also the university I went to, you weren't actually allowed to declare your major until halfway through the second year. And they force you to take courses in different areas. And so the short version is I took a history course that I loved and just went, actually, this sounds fun. I'll do this.
I'm not sure if you're familiar with Robert Hagstrom's work, or probably Charlie Munger's work with the multidisciplinary approach. But a lot of what they advocate for, like the late Charlie Munger advocated for, was a more liberal arts style of education to give yourself exposure to different thoughts and different frameworks for understanding the world. I feel like with your undergraduate degree, I feel like that, even in Australian context, that would be extremely unique in Australia, where it is more seen as a trade school, like the economics or the commerce degree, the business degree, accounting. These are the bread and butter for the Australian context, right? Then you moved on from university, if I'm not mistaken, you moved into consulting. I'm curious to know why you found that was the path that you wanted to take straight out of school.
Yeah. Well, as I said before, I knew I wanted to go into banking. And so coming out of university, I applied to a range of investment banks, commercial banks, and consulting firms. And I stumbled into this funny little boutique consulting firm called First Manhattan. And the interesting story there was I decided after going through the recruitment process that my number one job that I wanted was to go into the international finance program at JP Morgan. And I applied for that and I got the job. But along the way, I had also interviewed with this First Manhattan, and I got an offer from them as well. And I remember thinking, so this is weird because on the one hand, I've got this offer that I thought was my number one choice, but my heart is telling me to take this other one. And so I actually turned down JP Morgan and took the First Manhattan job. And the reason I did that, to the extent there's a rationale for it, it was I thought I'll learn more about banking working in a consulting firm that focuses on banks than I will working in a bank. And I think that proved to be true because you're working on all these different projects in different parts of the organization. And so you're picking up functional and line of business knowledge quite quickly. And so I think that every year I spent there was probably worth 2 or 3 years of actually working in a bank. And it set me up well. I think my career went a lot faster as a consequence of that choice.
I wanted to, it would be remiss of me not to ask you this. How did you know in year 10 that you wanted to be in banking? I feel like I've never met someone in the entire universe that wants to be in banking at year 10. I mean, not to say that that's a bad thing or unbecoming in any way, but I'm just curious, how did you know?
Yeah, I've told the story enough times now that I can say it without being totally embarrassed, but a level of embarrassment is probably appropriate. The way it happened was it was actually a year 10 English class. We had to write our first ever term paper. And it was one of these things where it was about doing the process of research and writing that we were being asked to do. And I went to my English teacher and said, I don't know what to write about. And he said, well, just get the New York Times and see what's on the front page of the New York Times that looks interesting and write about that. And at the time, it was in the middle of the LDC debt crisis. All these Latin American countries were defaulting. So this is about 1982, thereabouts. And by some weird coincidence, my next door neighbor had a friend who was the head of credit for Latin America for Citibank. And I still, for the life of me, have no idea how this conversation came up. But my neighbor said, why don't I introduce you to this guy and you can interview him and use that as the basis of your paper. And so I got on an interview with this fellow and he was very generous with his time. And I remember this moment where I asked him pretty late in the interview, what are all these loans for in the first place? And he said, oh, well, these countries are desperately poor. And these are loans to help them build schools and hospitals and roads and water treatment plants and apartment buildings so that millions of people can emerge out of poverty and have a better life. And I remember thinking, wow, that's cool. So you could work in an industry in New York and you could make decisions that improve the lives of millions of people. That's cool. And so that was it. It just was this notion of being able to work in a business that could have that kind of enormous impact. And so for the rest of time in my high school and in university, whenever I had an opportunity to pick a topic for a research paper, I would pick something that was at least tangentially related to an aspect of banking. And I just got more and more interested in it as a consequence.
I really like this idea of leverage in life and in business, and a bank has leverage inherent in its structure, right? And the ability to create those loans, facilitate those loans, has the financial leverage, of course, because it's relent and money creates more money, so to speak, but also the fact that the impact of that lending that money in the first place has a real human impact, which then helps another generation. I just find that that's a fascinating story, Brian. So thank you for sharing it. Coming back to First Manhattan and the consulting, you said something interesting before, which was that you would have got, I guess, probably more perspective on banking as a whole by being in consulting rather than being in the bank itself. It's kind of like the forest from the trees idea. How did that go? Like, can you talk to us about the practical realities of being in a consulting organization? I'd imagine I've never done it myself. I'd imagine it's quite intense, long days, these types, surrounded by really smart people. Can you just talk to us a little bit about that time?
Sure. Well, it's all project work. And over the course of a couple of years, you're working on different projects for different clients that range from 1 month in duration to 3 or 4 months, sometimes 6 months. And you're working across different functional verticals within the organizations as well as different lines of business. So my very first ever project, we were hired to do project management for a major systems replacement project for a big investment bank. And so in the first month, I had to learn what is it to do project management in a big technology project and how does that work? And effectively, I was the admin guy pulling together the Gantt charts and preparing the monthly reports for the steering committee. And so I got this view of, okay, how do you run a big program like this? What are the tools that you use? And then I had to learn very quickly what is all this terminology? How does that work? And then went from there into a project working for a big commercial bank in California that was trying to look at its different lines of business on a consistent economic risk-adjusted return basis. And it had all these different parts of the business that were on different accounting principles and reporting different numbers. And so the CFO couldn't get a view as to what was the real return on capital. And so the first 4 months of the project were us writing papers to articulate the principles on which we would do funds transfer pricing or capital allocation or credit risk provisioning, so that everybody was doing it in the same way. And then we would have these meetings where we'd articulate how we thought this should work and get people together from different parts of the business to argue that through and then agree on a set of principles. And then once that was done, we had to build the spreadsheet to rejig everybody's numbers to be consistent with those principles. And so I was doing a lot of the spreadsheeting work as well as a lot of the drafting of the documents. And so I learned all about that. And so I guess the answer to your question is you're working on different projects. I was working for very senior partners who were in various ways experts in their field. And so watching them, going to meetings, listening to them talk to the clients, and going away and either building spreadsheets or building models or drafting documents. And so I had to learn how to write. I had to learn how to do spreadsheets that didn't have circular references in them. I had to learn how to work on very little sleep. It was always quite compressed timeframes. But you just constantly being thrown into the deep end and learning and and banking is such a big, complicated sector that there was always something new to learn.
I feel like that is such a fertile ground for someone like you in those days. I think that investing is one of those areas, and we're all investors that listen to this show, Brian, or watch it. But I feel like investing is one of those things where you see the forest and the trees, because you have to understand how various aspects of an organization impact, whether it's management, which we'll talk about, whether it's the products and the marketplace dynamics, whether it's the source of capital, all of these things interplay, right? And it gives us that perspective. And Buffett often quips that he's a better business person because he's an investor. And we've said on the show quite a few times when we speak to a lot of leaders and these types of people that the first job out of uni is often the most profound and on someone's career. And I feel like for you, that was definitely the case, because had you gone to JP Morgan, you might have become, a cog in a very big wheel, but lacked the perspective of what's going on the other side of the wheel. I've got one follow-up question here, which is that you've interviewed a lot of people and given jobs to so many people, and you've had teams of thousands and thousands of people over the years. How would you know if there was an 18-year-old or a 20-year-old Brian knocking on your door? He's presented with, this arts degree of European history, and he says he wants to go into banking. Like, how do you not miss those people? Like, how do you not miss the kind of the diamonds or the, chalk and the cheese? Like, how do you find the people that you really want, even if they're in front of you? Because people find that so difficult. I know that's a kind of loaded question, but I'm just curious. Like, how do you think about that?
Well, I think about it largely the same way for a young person as I would think about for a more experienced person. And that is, I'm interested in thinking, what are the inherent capabilities or mindsets or competencies that are going to make someone successful in this role? And in what way has this person demonstrated that? And try to be willing to think laterally about the way they've demonstrated the underlying drive or capabilities or mindsets that are going to be helpful. And that's the bit that I think people often miss, is they look for someone has done this somewhere else, and so therefore they can do that. And my view is generally, if somebody is doing that job somewhere else, you probably don't want them if they're available to you, because it probably means they're not that good at it. And so I'm usually looking for people who have demonstrated something about, and for younger people, it would be more about, where's the internal drive, the willingness to learn, what's the motivation to get ahead? When I interview people, a bit like this conversation, I always am my primary goal is to try to figure out what makes them tick and what's going on in their head that's going to drive them and make them likely to want to overcome obstacles and be successful. And if I feel like I can figure somebody out in that respect, it's easier for me to try to picture them in a role.
That makes sense. I can't remember if it was Nicky Shivak or Nick Crocker, Nicky Shivak's co-founder of Blackbird Venture Capital in Sydney. One of them said that when they hear that, someone's come from, like, this founder's come from X or Y, and therefore it's a good investment, they said, like, it's got to be like one of the worst indicators. Like, it's interesting that you would kind of reverse that the other way to think, well, why did they come from there in the first place? Or, why did, that's really interesting. So one of the things I've heard you talk about is the transition to ANZ and the responsibilities that you took on there. Can you talk us through that? Like, what were the early days of ANZ like? Were you in Melbourne? Where were you? Like, what were you doing?
Yeah, so I came to Melbourne in 1994 and ended up spending about 3 years there working on a range of projects. The first project was framed as a distribution strategy project. And really, I think the question they were focused on was, this was at a time when ATMs were starting to happen and telephone banking was starting to happen. There was this notion of PC banking. The internet didn't really exist yet. And they were wanting help figuring out how to deal with that. And so we ended up doing probably a 9-month project that was really an overall strategy for the retail business into which the distribution strategy fit. And that put me in contact with lots of senior people across ANZ. And that led to us being asked to do another project for the business bank, which we did. And then there were some organizational changes, and I had done a project in New Zealand as well for ANZ. And then my client, one of the senior clients, offered me a job effectively implementing one of the streams of our project, which was, we had made a recommendation that they needed to shift to database-driven marketing approaches. So using data to drive strategy and marketing. And my client offered me the job to come in and work for ANZ and build that team. And I said, well, thanks, but no thanks. I'm pretty happy being a consultant. And he said, well, okay, how about we do a consulting assignment? And the assignment is you do the job. And I said, oh, well, okay, that's interesting. And so we came to an arrangement with First Manhattan that they effectively seconded me full-time to ANZ to build this team. And so I went from being a consultant managing 4 or 5 analysts to suddenly I was actually carrying an ANZ business card and managing 30 people that had been brought together from different parts of the organization to create this capability. And I just found I got tremendous satisfaction out of managing people and leading people, who many of whom were just not like me. But it was incredibly satisfying to help them be successful. And so that got me starting to think that, okay, I had always thought I wouldn't stay in consulting forever, but that gave me a taste of management that I really enjoyed. And so a couple of years later, I was offered a full-time job. I had gone back to the US for a couple of years of consulting, and then I married my Australian girlfriend, and we came back for a wedding reception, and my old client offered me the job running ANZ's credit card business. And at that point, I'd been in consulting for 10 years, and I was ready to get out. And so we moved back to Melbourne in 1999, and I took on the job running the credit card business.
That was, from my understanding, that was a very big business at the time.
Yeah, it was 1,000 people thereabouts. We were a pretty important business from a profitability point of view for ANZ, and it was certainly a very fast growing business because people were starting to shop online, and credit cards were quite profitable. But there was a lot to be done, and a lot of technology investment, a lot of customer experience improvement, a lot of marketing improvement. We had the great value of what was then called the Qantas Telstra Visa card, which was the most popular credit card in the country. It was the only one that had the frequent flyer points at that time. And so it was very much in demand, and it gave us a good affluent customer base for the bank. So yeah, it was really interesting time.
We're going to come to it in a moment the book that you wrote that talks about leadership and principles, and um, I without getting too deep into that right now, I just want to know, did it change? Like, was there a material change in the way you conducted yourself as a manager, as a leader, going from 30, let's say, I don't know exactly, when you went back to the US, it might have changed again, but let's say from 30 to 1,000. Like, you've obviously had the time on the tools, you've been in the, in the weeds, understanding how systems work, how banks work, how everything works, and you've got this great breadth of knowledge. But then to sit on top of 1,000 people, does that change materially in the way you conduct yourself?
Yeah. Well, I always tried to still be myself, but certainly I had to think quite differently about what was I there to do, and how did I need to organize an operating process, and how did I need to think about leading people, both my direct reports, and then how do I create or shift a culture of 1,000 people? Quite a different challenge. Simplistically, and part of why I liked going into management was that in consulting, the value system is largely about being the smartest guy in the room. It's kind of a big smart off, even within the consulting firms. And when you go into management, it's not about that. It's about how do you harness the collective capability of the people that you work with to deliver outcomes. So it's just a different orientation. And I had a lot to learn, because I didn't, and I still don't have an MBA. I hadn't had any formal leadership training. So I had to figure it out. And that was stimulating, but also a bit scary.
I'd like to flash forward a bit to the GFC, which was a critical moment in all banking history, all financial market history. Still, from a stock market perspective, one of the worst single drawdowns in history, if not the worst, depending on the market that you look at. At this time, if I'm not mistaken, Brian, you were in the UK or going to the UK? Can you
No,
talk?
I was still in Australia when GFC hit.
Right.
So in 2008, I was still working for ANZ. I was running Australia for ANZ at that point, working for Mike Smith. And then I went to the UK in mid 2009.
What drove you over
there? Two things. One was I wasn't really enjoying my job anymore at ANZ. Things had changed quite a lot, and I wasn't finding it as stimulating, and culturally things had shifted a bit from the way it had been earlier. And then I was offered this job to go be part of the turnaround of RBS, which was the biggest bank failure in history, off the back of the GFC. And that sounded really interesting. I thought I'd learn a lot. I'd always wanted to work in the UK. I'd had a huge amount of respect for RBS before the crisis. And they were quite famous in retail banking circles around the world for the things they were doing. So the opportunity to go and run the retail bank at RBS in the middle of the crisis, just, I don't know, maybe I'm a glutton, but it sounded fun, and it was an amazing experience. I learned a lot.
What happens in the banking crisis, global financial crisis? You're going into this business, this organization that's got a huge legacy and history, and it's in a moment of a crisis itself. What does that look like? When you get there, what do you do?
Yeah. Well, in the case of RBS, it was really messy. So they had essentially, RBS blew up as a consequence of what I call banking 101 errors. So it wasn't actually that sophisticated. It was, they became convinced that they bought into a couple of core ideas that were just wrong. So one was that they had this saying, which was, I should explain what do you do? So the first month I was there, I just went around meeting people. I met probably 8 or 10 people a day. And every single person I met, I just said, so what the hell happened? And I got probably, I don't know, 100 different versions of the story, talking to people, senior, junior, inside, outside, different parts of the bank, and so on. And that allowed me to build a mosaic. In investing, we talk about the mosaic theory. So I was building my mosaic of what happened. And my conclusion was that, number one, they had this view that liquidity was endless. So they have this saying, I heard it repeated to me endlessly: we're the Royal Bank of Scotland. Over 50% of every transaction in Britain happens in our systems every day, so we can always get money. So they had this belief that they had endless liquidity. Number two, we've studied bank valuations over time, and the ones that get the most value increase are the ones that grow revenue. So our number one target is to grow revenue. And number three, the way to achieve anything is to align people's incentives with the outcome you want. So they started paying investment bankers cash bonuses based on gross revenue growth after 12 months. And if you combine that with endless liquidity, they basically gave a bunch of investment bankers a blank check and just said, go grow assets. Mm-hmm. And so they did. And then that was all fine until the music stopped and suddenly the liquidity wasn't there, and they hadn't been focused on the quality of the assets that they were writing, and recognizing that if they didn't have sufficient capital buffer, it was a big problem. And so that's what happened. Now, the consequence was that you had tens of thousands of people who, number one, their jobs were now at risk. And number two, for years, they'd been encouraged to invest their annual bonuses in RBS shares because RBS shares had kept going up. So I had thousands of people working for me whose life savings had been wiped out, and now their job was at risk because RBS shares had gone from a high of something like 16 pounds a share to, when I started there, they were 9 pence. So from a cultural engagement point of view, it was pretty dire. And so the short answer of what do you do is, aside from figuring out what's going on, is you go back to basics about why are we here? What's our proposition to customers? Why do they choose us? What do we need to do well? How do we make money? And so it was really peeling away all these things that had been added over the years, or where people had lost focus on things that mattered as a consequence of this kind of out of control growth imperative. And there was probably one other element, which was that the CEO, who I've never met him, this guy, Fred Goodwin, was quite a powerful personality who, again, through my mosaic view, was someone who really didn't like bad news, and also had a real thing where he didn't ever want to be seen not to know the answer. And so as a consequence, he delegated things, particularly around the investment bank, that he shouldn't have delegated. And so was quite disconnected from the actual reality of what was going on and the problems. And he was focusing on the wrong things. So I guess that was another lesson that, for me, this thing about, I think it was in the Good to Great book, which is quite a good one, this notion that great businesses stare into the brutal reality of their situation. And I've always tried to do that. Is, okay, what's really going on here? However bad it is, let's face into it. And then we can figure out what we need to do.
I think I've heard you talk about that before. Can you talk us through, like, what would be maybe an example of staring into the reality of, like, what's wrong here, rather than just trying to keep this, I guess, the status quo, keep the image? I don't know what the incentive was for that person in particular, but I guess, what is the reality of that kind of self-imposed culture on an organization? And when you say something like, they're kind of like they've pushed down that responsibility or pushed it off to someone else, like, What does it actually mean for people that haven't seen that up close? Like, what are the consequences of that?
Right. So staring into the reality, I guess you start with the numbers around customer experience, around profitability, around the cost structure, the relationship between revenue and cost, the risk results, peeling apart the credit portfolio to understand not just the averages, but what's going on inside the averages. So that's probably the starting point. And often over time in large organizations, whether deliberately or not, people begin to spin those numbers in the way that they define the reports or the way they define what goes into it. It's not so much that they lie, it's that they gradually tweak the way things get presented to avoid having to answer hard questions. And so you often have to, I talk a lot about de-averaging is, okay, but what's going on underneath that? And that's where you often what you're finding is that the average is fine, but you've got concentrated problems in certain areas. And so what are they and what are you going to do about that? To your question about not digging into things, what would an example be? Well, actually, there's a real story I remember. This is after I got there. I was told this story about how during Fred Goodwin's era, they had a daily meeting of the senior executives. It was, for amusement value, it was referred to as the daily beating because Fred would get stuck into someone almost every day about something. And it was supposedly in the interest of good execution that they had this daily meeting. But in some respects, it wasn't that effective. And they would go around the room and each executive would give an update from the previous day. And on this particular day, the head of the investment bank announced that they had lost 450 million pounds overnight in some markets position. And Fred apparently spent about 90 seconds saying, oh, well, what happened? Oh, okay, but you're on top of it. Yeah, that's good. Okay, fine. And then he came to some other guy who was running the insurance business where they were in the process of integrating an acquisition. And the guy said, well, we're running a bit late on the integration of the systems and it's going to cost us an extra £1.5 million. And Fred apparently spent 40 minutes then berating this guy over the £1.5 million delay cost when he'd spent 1.5 minutes on the 450 million pound loss. And you say, well, why is that? And the answer was because Fred was uncomfortable digging into the other one because he didn't really understand it. And if he asked more questions, it would become obvious that he didn't really understand the market's positions that were going on. But he did understand merger integration. That was where he felt comfortable.
Interesting.
So I think for me, and there were a bunch of examples like that, where he would spend huge amounts of time on things that interested him or where he felt comfortable and no time at all on things that weren't. And so that's played into, I think, one of the habits of thought that has stood me in pretty good stead over the years is the commitment to always asking dumb questions. And just, I've always made a habit of going, I'm sorry, I just don't understand that. Can you explain that to me? And I have this point of view that if something's explained to me once and I don't understand it, it's probably me. But if it's been explained to me twice and I still don't understand it, it's probably them.
I like that. There is two more questions about this time before we come to more the CEO style things that I wanted to ask you about. If I'm not mistaken, like you were in the UK, you're working hard. Um, from a personal perspective, and you divulge whatever you want to divulge, Brian, of course, but I understand that this was also a pretty challenging time for you. Um, if you're willing to talk about that, you can.
Yeah, sure.
Yeah.
Yeah. So what you're referring to is 2 months after I arrived in the UK, my wife left me and took the children back to Australia. So we had 4 young kids, and they stayed with me for the first term of school, and then they went back at Christmas. We were there in the autumn UK season, and then so I now suddenly found myself, because of the way my contract worked, I really had to be there for 3 years in order to kind of earn my way back into what I had given up at ANZ. And so I found myself with my separated wife and 4 young children on the other side of the world, which was pretty tough because it was quite unexpected, if I can put it like that. And then I think a couple months later, I broke my leg in a biking accident. So now I was living in a typical London house with lots of stairs, with a kitchen in the basement, my bedroom upstairs, on crutches on my own, trying to navigate that while also overseeing 3 businesses at RBS in the midst of a massive turnaround exercise. So yeah, it was. And then the divorce experience was quite difficult, both emotionally and from a kind of legal perspective. It was pretty unpleasant. So yeah, not an easy time.
I would normally ask you, what did you like if you just put one foot in front of the other? But seeing that your leg was broken, I mean, that probably would have been quite difficult. But
yeah,
I do appreciate you sharing that with us. And
but I would say to that point, though, I think there's something that I would say about that time, which I haven't heard other people say, and that was because people talk a lot about resilience and how to become resilient and all that. I would say, for what it's worth, I discovered I was resilient. I wouldn't necessarily have said I was a particularly resilient person, but it was actually what you said, which was effectively every day I got up and I went to work. And sometimes people can kind of overthink these things. I mean, it wasn't that I wasn't going through a lot. I was. It was a really, really hard time. But I found that just, pressing on, there was an element of time healing. And there was an element of, I've got a job to do. I've got a way to make a contribution. I have an obligation to helping these people who are in a difficult spot rebuild this business so they have a future. And so I do think for people who are going through difficult times, there is, for what it's worth, I would say some of it is just keep going, man. There's a quote I really like from Winston Churchill, which is, when you're going through hell, keep going. And that's what I did. And it eventually worked out.
It seems like a recurring theme of that, wanting to, like, putting yourself in a situation, maybe this one's a bit different, but having yourself in a situation where you've got to figure it out, right? Like, you've got to figure it out because there is no other way. You just got to figure it out. Whether it's from your consulting, whether it's from going to boarding school, you just got to figure it out. You just got to get on with it. And that's really interesting in the way you kind of potentially even like thrive out of that. So the final leg of this, where I'm going to jump off and ask more questions, is around your time with Westpac. So coming back to Australia, assuming the role, which I believe, if I'm not mistaken, is CEO of Australian Financial Services, and then the Westpac Group CEO. Why come back to Australia? Family, obviously, but like, what else was in Australia? What drove you back to Westpac?
Well, I'd always felt that Australia was home, had done for many years. I became an Australian citizen 20 years ago now, I think. But it was very much from a family point of view. My kids were all in Melbourne, so I needed to be in Australia. And banking at that point was all I had done. I did think about, well, maybe it's time to get out of banking. This is an interesting story. I remember sitting around thinking, well, if I go back to Australia, what will I do? And didn't feel I could go back to ANZ. I, to be honest, wasn't sure I wanted to go to Melbourne. It was, a lot of history there. And I thought maybe a fresh start in Sydney might be better. Wasn't sure I wanted to go back to another bank. But I remember having this conversation with myself thinking, well, if I were to go to another bank, it would have to be Westpac, because from a culture and values and purpose point of view, Westpac was very closely aligned with what we had been doing at ANZ when I was there. And the funny part of the story is 2 weeks later, the phone rang and it was Gail Kelly asking me what I was up to. And I said, well, trying to figure out a way to get back to Australia. And she said, well, I might have an idea for you. So there's something weird about the universe conspiring to make it happen that I can't quite explain, but it was good.
So people will be familiar with you from your time, probably most recently with Westpac, and there were some experiences, obviously, where you were CEO during the time when we had the Royal Commission, which put your face on a lot of newspapers and that sort of stuff, and a lot of difficult times and a lot of challenging times through that period. I wanted to ask you a question. We have a lot of investors who listen to this show that invest in bank shares. Right? And this is more just a journey for anyone that is investing in any type of company. But I have this kind of view, Brian, that under a certain period of time, which I don't know how long that is, that the narrative is far more powerful than fundamental company value. So I'm curious what you think drives the share price. If we took like a 3-year view, is that the narrative?
Sadly, I think you're right. So I had done quite a lot of work when I was at First Manhattan on what drives bank valuation. And banks mathematically are pretty easy to value because in a sense, a bank can be thought of as a big bond. And so you can use financial ratios and so on to value a bank pretty straightforward. Essentially, the market to book ratio of a bank is a function of the return on equity relative to the required return adjusted for growth, which probably a lot of your listeners would know what I'm talking about there. And so I used that insight to help me think about what are the things that we can do to drive up the ROE, to drive up the growth rate, or to reduce the required return. And by the way, I concluded that most of those things are things that actually are about doing the right thing for customers, as well as becoming more efficient. And so my strategy and focus was primarily on things that I thought would grow the long-term value of the company. And what I discovered, to my disappointment, was that the people who were coming to an opinion on banks and in making the choices that moved markets on banks were not driven by that. They would probably say they were, and some of them are, but many of them, particularly on the buy side or on the sell side, are really driven by the narrative. And there's a lot of buy side guys who pay attention to the sell side guys. And so it can be extremely difficult if you fall on the wrong side of whatever the prevailing narrative is. And we definitely experienced that at Westpac around the time when I took over. There were a bunch of examples of that, but the simplest one was that there became this notion that investment property loans were dangerous and were risky and bad news. And it became this kind of Australia, by the way, I think part of the reason why this is important is the Australian market is quite concentrated. It's a small market. It's a bit of an echo chamber. There's this real relationship between the investment bankers, the media, the regulators, the politicians, and it can turn into a spiral. And so a spiral kicked off about this notion that investment property loans were risky. And so the narrative became, who's got the most investment property loans of the banks? And you need to sell that bank, and you need to buy the banks that have lower investment property loans. And no matter what we did to try to explain, there's a reason why Westpac has a lot of investment property loans, and that is because they're really profitable. And who has investment property loans? Wealthy people do. And so actually they're lower risk, and on a risk-adjusted return basis, they're really good. And no matter how much we said that and tried to demonstrate it, the narrative was, nope, investment property loans, bad. And so our stock just got hammered and stayed like that for several years because everyone concluded that this was terrible. And APRA said, right, you're going to have to hold more capital. And everyone it just became this thing. And we found ourselves just kind of whistling in the wind on this. And by the way, history has proven we were right. But didn't matter. The narrative was over there. And so our stock got sold off. And that was unedifying to say the least.
I don't want to throw Mike under the bus here, but I'm pretty sure he had a comment which was maybe taken out of context, as they all are in the media. But I think he might have said something along the lines of analysts are like lemmings. I could be mistaken, but he was referring to this problem that we have in that a lot of CEOs. Well, let's start with investors. Investors expect long-term results, but we measure them with short-term performance.
Yeah. So I think that's the fundamental thing that I came to see is that, and I have a CFA, so I was trained in how to do all this stuff. And that informed my thinking, was much more purist about what really creates value. But there are perverse incentives where you have these big superannuation funds that are trying to make asset allocation decisions across fund managers. And those fund managers are competing for money on the basis of their 12-month results. And so their big thing is, I don't want to be too far away from the market, because if I really underperform the market for a year, I'm going to get smashed when I go back to raise more money. And then on the sell side, you have these guys who are trying to drive trading volume. And so as a consequence, they're essentially journalists trying to get headlines. So they're always looking for what's the simple angle. And so that combination of incentives, and then you add into that regulators who are worried about losing their job if something happens and they get embarrassed and the politicians start calling for their heads. So they're in very much risk avoidance mode. And so that whole combination creates a dynamic in share prices, particularly if you think about banks, where essentially the question around the banks is, which of the four banks should I hold? Because there's such a big part of the listings that you can't not hold banks. And so the story all becomes trading in and out of them, which again is just driven by the short-term narrative. So, this is a rhetorical point. I don't know the answer to this, but if you think about that combination of those dynamics along with massive superannuation funds relative to the size of the public of the ASX, I worry a little bit about whether the rules of valuation really apply in the way that they ought to. I don't know what to make of all that, but it does worry me.
I actually think about that a lot. I had a conversation with someone last week about this, Brian. It's like someone wrote into me saying, "Oh, well, CBA's share price is still going up." And I was like, well, yeah, 10% of Australia saves and invests every month via superannuation. Where are they going to put the money? So I often think about that as well. Like we see this gradual expansion of price to book ratios, price to earnings, whatever, yield compression, however you want to frame it. I wonder, like, I'm not going to go on record as saying this is the new normal and buy bank shares. But at the same time, I think, it seems to have been playing out for the past 10 years, past 20 years.
Well,
I don't know.
One way to rationalize that perhaps is one of the main things I learned in the CFA was that 90% of variation in returns is a function of asset allocation, and only 10% is a function of security selection. So you could perhaps come to a view that dynamic is going to drive asset allocation continuing into those companies. And so maybe you have to make that decision on that basis, rather than a view of inherent value given the lack of opportunities elsewhere.
Mm.
But it's a shame because at the other end of the spectrum, and I'll put in my little advertisement for Before Pay, which I chair, which is that we've got this profitable company that's been growing well. And because of its market cap, well, first of all, the narrative turned against buy now, pay later, even though we weren't a buy now, pay later company. We were lumped in with them. And so the narrative went against us. So no matter how much we explained, we actually aren't a buy now, pay later. Everyone's like, oh, you're in that bucket narrative, so can't buy you. And then because our market cap was below some notional amount of what funds can pay attention to, no one would cover the stock or buy the stock. And you go, but hang on, this is this great business model, now profitable, growing well, great opportunities for growth, and couldn't get anyone to pay attention to it. So yeah, I don't know what to make of all that.
Yeah. I have a kind of it's a lot of questions I have. And but the one of the questions I wanted to ask you is when, say, like if you take your time with ANZ early 2000s and you took like maybe say when you left Westpac at the end, if you were to juxtapose those two, I guess, banking systems, like as in who are the key pillars, right, of each moment in time, do you think it's like a surprise that say like CBA in terms of its like market cap and that type of a thing went on that trajectory? Macquarie's kind of entered as like it was this fifth, and now it's really formidable, player. Are you surprised in like the way that the landscape evolved, or was that something that you think was already set in motion?
Yeah, I'm not overly surprised. I think that I'd take those in pairs. I think CBA has done a remarkable job at a turnaround. When I was at ANZ running the retail bank, we had ads essentially making fun of the poor service at Commonwealth Bank, which worked really well because they were still in that legacy of government ownership and almost public service mindset. And I think starting with Ralph, they and then Ian and now Matt, they've done a phenomenal job of taking a long-term view of how they needed to restructure the systems and processes within that bank to take advantage of their inherent market share strength. Mm-hmm. And I think they've done a superb job at that, and have been doing so for 15, 20 years. So that doesn't really surprise me. I think it's a shame the other banks haven't responded as effectively as they could have. I think there have been wasted opportunities at ANZ, NAB, and Westpac at various times over the last 20 years. But they all still have really strong franchises. And I think in banking, the answer is pretty clear now how to run an effective retail bank. What you need to do is not really hard to figure out. It's maybe a bit harder to execute, but it's pretty straightforward.
For us that need to ask twice, maybe just once. For people like me, Brian, what do you mean by that? Like, what does it take?
Well, simplistically, it's a combination of a really streamlined, data-driven, technology-supported set of processes and customer experience, along with a layer of highly trained frontline-facing people who are committed to helping customers with their more complex needs. So the combination of really slick, simple, efficient automation for your daily stuff, mm-hmm. combined with access to human beings that are empathetic and well-trained and thoughtful, mm-hmm. and keeping the products reasonably simple, leveraging data to hyper-personalize the experience for each person. So I think that's the essence of it.
I wanted to ask you one really narrow in question, really focused question was when you ran Westpac, you made, I believe, correct me if I'm wrong, believe you made investments into Coinbase and to Zip.
Yeah.
Um, and in a comment that you had on another podcast, you said that I think you overruled someone, that the only two investments that you overruled someone in your senior team, and you said, we're doing this. Why those two? Why Coinbase? Why Zip? Not necessarily like on the investment merits, but just what did you see, I guess?
So I saw that the development of technology and digital financial services, fintech type businesses, was going to play a profound role in the evolution of the financial system. And that if we didn't participate in that, we were in danger of shrinking into irrelevance in various ways. And in those two cases, so with Coinbase, although I wasn't, and frankly still am not, a cryptocurrency fan, it was clear that there was going to be ongoing demand for cryptocurrencies. And Coinbase seemed to me to be the most robustly designed enabler for people who wanted to participate in that. And so the line I've used is it was picks and shovels at a gold rush. So we didn't have to invest in crypto, but it was pretty clear that the people selling picks and shovels were going to do well. And it was, to a certain extent, an option that if it does really take off in Australia, wouldn't we like to be the partner of the best platform for that? So that was so I guess my overruling in that case was people saying, oh, crypto, yikes, can't do crypto, to me saying, time out, let's think about what this really is. And do we want to have an association with these guys in the event that this really kicks off? So that was that one. And by the way, that the combination of those two that you mentioned, I think Westpac trousered $1 billion profit off of those two. So that was they were pretty good decisions. On Zip, my view of the buy now, pay laters was that we, the banks, should have done that in the first place. Because I would say that to a certain extent, Zip and Afterpay are simply digital re-engineering of the Harvey Norman credit card.
Yeah.
If you think about the old experience of walking into a shop and you want to buy a fax machine back in the day, and you would fill out a paper form and they would send it off and tell you to go wander around for 10 minutes. And then you'd come back and they'd say, good news, it's approved and sign here. And you can pay this, you get it for 12 months interest free and then get it and pay it off after that. Well, that's all Zip and Afterpay were. And if you say that the banks are in the business of providing payments platforms and unsecured credit, which we do through overdrafts and credit cards, then, and we have the Visa and MasterCard systems with these payments terminals, why on earth would we not have offered that? And the answer is because we didn't think of it and because we were too stuck in our old business model to do it. And so I thought, well, gee, this actually is something that sits naturally with what a bank could do. And I had a view that there was a reasonable chance over time that banks might be natural owners of those sort of businesses. And so why not position ourselves for that?
So Brian, a few years ago now, you wrote a book called The Leadership Star. And in another interview, you described this as the book you wish you had 20 years ago. And so it's a practical guide. It's a tool for leaders in businesses, for if you're in a leader in a not-for-profit, a government, doesn't matter what context you're in. It's obviously available in audio and in like paperback. You can pick it up and pop it on your shelf and have a read of it. But in it, you talk about these, I guess, 5 keys, which are care, context, clarity, clearing the way, and celebration. Can you talk to us about, just as as much detail as you want to go into on those, and then I'll maybe pull a couple out.
Sure. Well, as you say, the background to this was when I went into running that credit card business, I didn't have any background in leading big teams of people. So I was really interested in what do I personally need to do to create a highly engaged team, on the basis that I bought into the idea that if you can get people feeling really good about where they're working and being a place where great people want to work, then that's going to give you an advantage in consistent execution. So I wanted to understand, what is it I need to do? And I found that there was very little to help me with that. Like, if you ask HR teams about engagement, they would talk in conceptual things like, well, we need to look at our remuneration policy, or we need to look at our communication strategy. And I'd go, well, okay, fine, but what do I need to do? And over the years, I started paying attention to leaders that I came across who were really good at this, and trying to think about what exactly do they do. And eventually, I would apply these things, and some of them worked, some didn't. But I developed this little framework, frankly, as a consequence of being asked to explain what we were doing to one of my colleagues. And I thought that I wanted to make it memorable. So I worked out that I could make the 5 things all start with C. So it's called the leadership star because the star has 5 points, and the 5 points are 5 C's. And so my hope is that if you've learned this, you can carry it around with you in your head. And I found it just really helpful for myself for assessing situations and looking at what I was spending my time on, and whether I was doing the things I needed to do to lead my people effectively. So if I just quickly, if you like, I can run through the 5 C's. And each of them are kind of obvious, but they have a subtlety. So care, which is the first one, the subtlety here is caring about people as individual human beings. So demonstrating through your actions that you want to see people be successful on their own terms, as opposed to treating people as units of production, or assuming that everybody wants the same thing. And so what I found is that if you build a relationship of genuine trust where people believe that you have their best interests at heart, you can then give them hard feedback. You can give them opportunities, and they will rise to the occasion. The context is number 2, and that's about the why. So, and the subtlety here is, why does the organization exist beyond making money, and why does what each person does all day link back to that sense of purpose? So each individual can understand how their contribution links to something meaningful, and often executives assume people know that, but in a big organization, some of those people don't have that visibility about how they connect to the purpose. Clarity is about making sure people understand what is their job exactly. So why does your job exist? What is it you're here to do? Because in a big organization, people get pulled in lots of different directions and not focus on the right things. And then it's about helping people understand, what does good look like and what does great look like, so that people are so clear on the outcomes that are expected that they can almost do their own performance review, because they know you've had that conversation about, here's what good would look like, here's what great would look like. And people get bought into the process of setting stretching goals for themselves that then motivate them to grow. Where are we up to? So clearing the way is about knocking over the barriers to people's success. And the subtlety here is that you need to ask people what's getting in the way of their success, and you need to be curious and go and look with your own eyes as to what's actually going on, because sometimes people just accept their context, and they might have been employed and been told this is just the way we do things around here, and so they think they can't question them. And so it's the job of the leader to go and really explore what's actually happening, what's actually getting in the way, and being proactive about knocking over barriers to people's success. And celebrate is about the culture of recognition. And so the subtlety here is, it's not just about pay, parties, and promotions. It's about, how do you day in and day out connect a sense of appreciation for people back to what they've been doing, so they feel like they matter, they feel like they're recognized, and you're building emotional connection between their achievement and the tasks that they took on. And so that creates a positive spiral that makes people continue to want to engage and invest their time and emotional energy in the work. So that's the framework overall.
I wanted to spend about 2 hours just on these 5 things. So, but in the interest of time, I will obviously put all the information and links that people need in the show notes. But Brian, there was the one that stood out to me as kind of like an interesting way to think about it was this idea of clearing the way. And I'd hoped maybe you could give our listeners and viewers an understanding of like what that would actually look like in practice. Like, how do you
Sure.
clear the way? It seems intuitive, but how does it actually take place?
Sure. I've got a great example on that one. So when I was at RBS, one of the issues that I inherited was complaints handling. So the banks in the UK were under a lot of pressure from the media, from the regulators about how rapidly they were dealing with complaints. And the volume of complaints was enormous, and they were constantly behind on meeting the guidelines. And we had over the course of a year and a half, 2 or 3 senior executives charged with fixing this issue. And they did what you would logically think, which was they said, well, let's fix the root cause of these complaints so the complaints don't happen. And so a lot of work was going into that. But after 18 months, we still weren't getting anywhere. And I got very frustrated. And one day in a conversation with someone, I said, how many people we got working on complaints anyway? And the answer was like 3,000. I said, excuse me? We had an operations center in Birmingham with 3,000 people in it handling complaints.
Wow.
And I just thought, this is madness. And I just couldn't for the life of me get my head around what was going on and what were all these complaints that we were getting. And so in frustration one day, I said, all right, I don't get it. Here's what we're going to do. I'm going to go up to Birmingham myself, and I want to sit in a room with a couple of team leaders who actually handle the complaints processing. And I want them to bring folders showing the actual complaints. And I want them to explain this to me because I've heard all this. We've had endless steering committees and I don't get it. So I did this. I went up on the train to Birmingham. I walked into this room. There was a big conference room, and there's piles of folders everywhere. And there were a couple of young team leaders there, very nice people. And I said, explain why I was there. And I picked up the first folder in front of me, and I opened it up and I started reading it. And there were about 35 pages in this folder. And it was letters from the customer, letters to the customer, screen prints, statements, back and forth, back and forth. And after a couple of minutes of reading this, I turned to one of the team leaders and I said, but this is a complaint about someone who's been double charged by the gas company. And they said, yes. And I said, so this isn't even a complaint about us. They said, no. And so I said, well, so why is this here? And they said, well, because our policy is that any complaint related to a payment has to go through our complaints management process. And I said, but that's stupid. And they said, yeah, but that's the policy that the risk team gave us. And I said, well, I could fix that. And they said, well, that'd be good. And I said, okay, we will change that policy, that complaints have to be complaints about us. They said, oh, that'd be fantastic. They were very excited. And I said, so what percent of our complaints are things like that? They said, oh, about 80%.
Wow.
And so my point was that 18 months of looking at this, multiple senior executives, monthly steering committees, endless reports, none of the senior people had actually done what I did and opened the folder and read it. Because if they had, they would have very quickly worked out what at least a big contributor of the issue was. And so for me, that's an example that these poor people were doing their best, complying with a policy that had been sent by some risk person who had obviously also never read a folder. And so that's just what goes on in big companies, is that things are broken down into different functions, different organizations, and everyone is rational within their own context. And sometimes you need the leader to go in and look at what's really going on in order to recognize that that's not working.
So maybe a practical takeaway is there for find out and ask the question, what's standing in your way? What barrier do you face?
Yeah, absolutely.
Just a really conscious question.
Yep, absolutely. Just tell me what's in. So it's two things. It's asking what's in the way. So we're clear on what your goal is, because we covered that in
Mm,
the previous item. So you know what your target is. So now what's in the way of that? And that could be a physical capability. It could be training. It could be an emotional hangup. It could be a political problem. It could be any number of things. So you actually have to ask. But the other part of it is I think you need to go and look, because sometimes people don't actually quite realize what the problem is. And
mm,
so I think that senior people have perspective across the organization that they can bring to looking at an issue. And so literally going down and saying, show me your process, show me the screens that you're using, show me an example,
mm,
walk me through this process.
Just being closer to it.
Yeah, yeah,
Yeah.
it's really easy to get separated from that as you become more senior.
Mm. Well, the book's loaded with ideas like this. So it's a great book to listen to. Just pick it up or not, and just listen on your phone while you do your business. It's great. So there are a couple of questions that I have in closing. Is one is like bringing us up to date with you now. Obviously, you would have had a hectic full plate during the time with Westpac steering through the Royal Commission and just running a bank like this. Um, but more recently, you've taken on the role of the CEO of Quantium's Health business. Can you talk to us a bit about this? Because some people would be familiar with the business, but nowhere near as familiar as Westpac. But I'm curious if you could just tell us what the business is and why you wanted to take on that challenge.
Sure. Well, I've had an interest since the early part of my career in the use of data to drive strategy. And one of the things that I took on after I left Westpac was I became an advisor to Quantium, which is the largest specialty data analytics consulting and development business in Australia. And so I've been an advisor there for the last 3 or 4 years. And then late last year, the founder asked me if I would come in full time to lead the health business. And I was keen to run a business again. And I'd really enjoyed my time at Quantium. And I was looking forward to having a learning curve, which, not having a background in the health sector, it's certainly given me a huge learning curve. So Quantium is just a fascinating business. It's a combination of engineers, data scientists, and consultants. And generally, as a specialty business, we focus on helping organizations solve complex data problems that might mean pulling data together from multiple legacy systems, building sophisticated dashboards or machine learning models. Increasingly, we're doing quite a lot of work with generative AI, both from a production and scaling up that capability point of view, as well as helping executive teams deploy generative AI to make themselves more productive and more effective. And so it's just with the advances in AI, it's a really fascinating place to be. And so the business I lead does work for the Australian government. We work for hospital groups, private health insurance companies. We've got offices in Australia, South Africa, and the UK, and doing some work in the US as well. Just across a range of things, but predominantly around bringing together big data sets and using that to develop personalized recommendations for people or help improve the efficiency of the different operations through harnessing and bringing together lots of big data sets.
It's interesting because if we go back to when you started in banking and the idea of distribution was, you know, banking over the phone and the PC wasn't like PC banking wasn't really a thing yet, but there was all this data just everywhere floating around, right? And a bank probably collects more than probably just about anything that I can think of. But fast forward 25 years, we've got the tools now, and we've got the infrastructure layer, the digital infrastructure layer that enables this. I guess there people would be also familiar probably with Quantium from the Woolworths perspective as well, being familiar with that business. Do you? I'm conscious of time, but in closing, I wonder, do you have a view on whether what we are seeing with AI? I know on the Leadership Star website, you can go on, there's like an Ask Brian page on there that you created, and you can ask virtual Brian about the book and these types of things, which is quite novel and quite interesting. Do you think that what we're seeing with AI, generative AI, do you think it's worth the hype? Like, do you think that,
Yeah.
yeah, it's transformative?
Yes, I think it's the most profound development we've seen in business since the internet, certainly since the iPhone. If you think about the way that the browser transformed the internet, generative AI is essentially having that same impact on business and the functioning of business. It's absolutely astonishing in the way it's increasing productivity. And our view is that in a couple of years' time, if you're not using generative AI to support you every day, you're probably going to be replaced by someone who is. And we've gone all in on AI at Quantium. It's our internal tagline, and we're running seminars now for large companies, teaching the executives how to use the tools. And I know myself, it's just profoundly changed the way I do my work and the quality of what you can do. But you need to know how to use it. But it is, it goes way beyond using Copilot to edit an email. I mean, this stuff, we use Claude by Anthropic and a bit of ChatGPT, but we use it in quite an advanced way. And it's just extraordinary as a thought partner, as a content generator, as a researcher, as a coach. It's just remarkable what you can do with these tools. And it's an incredibly exciting time. And to your point, I think banks have made tremendous progress in harnessing data to support their businesses, but lots of other industries are just at the start of that. And healthcare is particularly interesting to me because actually a huge amount of the data that gets created is actually healthcare data. But the healthcare system is pretty far behind in actually leveraging it for some good reasons and some not so good reasons. But what you can do now is absolutely extraordinary. And I think it's we're going to look back in a few years' time and the transitions of different industries are just going to be amazing.
It's exciting. The final question that I ask everyone that's a new guest on the show, Brian, is if you go back in time and tell yourself one thing about life, finance, investing, business, could be anything, what's one thing you would tell a younger Brian?
I'll give you two. So one, because you got an investor base, the one thing I would tell myself is to spend less money. Because I think I made an assumption that I could always earn a good living after a few years. And with the benefit of hindsight, I probably spent money on things when I should have been saving it and investing it and generating assets that generated an income. And recognizing that it's much better to spend money on experiences that you remember than things that depreciate. So that'd be one. And then from a professional point of view, I think the one bit of advice I'd give myself is make the hard decisions about people early. And that's a cliche that you hear from a lot of experienced executives over time. But there's lots of reasons not to make the tough decisions on people, but you don't always have as much time as you think. And getting the right team around you is really the determinant of your success.
I love both of those, Brian. I think there's a lot of quotes get thrown around, but the idea that a lot of stress comes from the decisions that we can make, but we haven't yet. And I definitely see that in my own business life. So, Brian, this has been super wide-ranging, really thought-provoking. And I know you're CEO of Quantium's Health business now, so you've got a full plate still. I really do appreciate you coming on the show and sharing a lot of your wisdom with us.
That's my pleasure. I hope it's been helpful for your listeners.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing,